Good morning, traders. It's 8:03 a.m. Chicago time, 9:03 Eastern U.S. time on Tuesday, the 11th of April, 2017. Thanks for joining me this morning yet again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning, as we review the overnight session here, is a little risk off on the equities. Equity indices, with gold leading the pack up 0.7% at $1,262.60, up $8.60 on the June 2017 contract in gold, followed by the yen, the US bond, the US 10-year treasury, the Euro FX, and the Bund. So pretty much everything that I would consider to be a safety instrument is positive. Everything else that has risk on is off for the day. The S&P 500 is off just 2.5 points so far, trading 23.50 even. Overall, not much to report news-wise. There's a lot of political stuff, as you already know, going on here in the U.S. At 4 o'clock p.m. Eastern yesterday, Fed's Yellen came out. And her key statement was to allow the economy to maintain its gains. She says, before, we had our foot pressed down on the gas pedal, trying to give the economy all the oomph we possibly could. Now the Fed is allowing the economy to kind of coast and remain on an even keel to give it some gas, but not so much that we're pressing down in the accelerator. That's a better stance on monetary policy. Again, the market's expecting about a two-thirds probability of a June rate hike. Okay. Other than that, the German zoo survey hits its highest level since August of 2015. And then in other news, there's really not too much else. The UK CPI came in stronger, 0.4 versus 0.3. PPI input came in at 0.4 versus negative 0.1, very strong. Again, the April German zoo survey came in at 80.1 versus 77.5. Pretty strong stuff there. As far as what we are looking for going ahead today, the only thing I have really of consequence is the 10 o'clock Eastern U.S. JOLTS job openings number. For February, there's no expectation of prior is 5.6 million. And then we have Fed Speaker Kashkari at 1:45 Eastern, Fed Speaker Kashkari doing a Q&A in Minneapolis. So we expect some chatter from that. And then, of course, let's change gears and look at what we expected yesterday. So I put out four different expectations yesterday. The key of which was that we would remain in range. We had spent the last 2 days kind of fiddling around with the range that was left behind from Wednesday's drop, and we have spent the last 2 days inside of that. The expectation, given that it was Monday following non-farm payrolls, is that it would sit sideways. That was the key expectation. That did not happen. This shape actually took place, but we managed to take out the high and go up to 63. The secondary hypothesis was an early attempt higher, and then the real move is down and then back to the middle. The tertiary likelihood or probability here for a play is an attempt higher that comes in with sellers and it breaks lower and starts heading towards 23.38. The fourth hypothesis is that it consolidates right on top of the point of control, the MC point of control, which then gives it the energy, given the 2 days of balance, gives it the energy to start breaking The target for that is 71.5 with some resistance expected at 65. Here's what actually happened. The market opens. Um, the market opens and then it starts to do this open auction, but with a pretty decent upward skew. Why is it an open auction? You could see here Delta wasn't going anywhere right from the get-go. It's kind of sitting sideways, and then it starts to build from this point onwards. Starts to build up. It pushes to the prior day's high at 60.75. Lingers around in there for a little bit between 61.50 and 59.5, and then it finally pushes to 63.25. Those who watch the order flow, I'm using S5 Bookmap for that. You can see that there were some pretty decent offers in the 62 to 63 area that the market attempted to push through and failed. We consolidated for a while here. We put some pretty nice zippers right there, and then I was well, in the S5 chat room, I'd commented to look out. This looks like it's going to spill, and it did. The underlying sectors were starting to get weak, although transports really held things up yesterday, uh, pretty strong all morning. And so we get the break down. So we have a range extension up on the initial balance early on, and then the market just breaks in an impulsive way. This here is an impulsive move right here, and it breaks below the initial balance low. This yellow line, the initial balance again, is the first hour's high and low, and that's when the highest participants or the higher time frame participants are expected to get their business done early in the first hour. We expect that to complete, and that's why we keep track of the initial balance. It breaks below, making this day neutral. Um, and then it continues and it stops just short, 2 ticks short of the prior day's low. So it took out the prior day's high and it just stopped just short of the prior day's low. And then it basically consolidated for the afternoon, building what looks like kind of a triple distribution, weird looking profile. There's a really nice taper at the top. I mean, the trading that occurred at the top, um, you could see it shutting off. You could see I don't have an image of it, but you can see the traders lifting the offer as hard as they can, creating all these collisions, and then it suddenly just tapers off and dies, and then the market starts to rotate down. Same thing at the low here. Didn't see much of a bid to hit against, but you could see that the auction was starting to slow down, and there was less demand or less selling on the low side. Let me turn down my Um, so this profile here is showing us again a lack of consensus to this day. There's really not the kind of build up to a point of control that we saw the day before and the day before that. So overall, we broke the high and we held a higher low. We're one time framing up on a day time frame. And then when you look at the balance we've had over the last few days, you can see that we keep pushing higher lows all the way through. So this is one time framing up on a day time frame basis. Okay. So as I continue to build this profile forward, so let's go back. This is where we were yesterday. You can see the point of control is fairly sharp on that MC point of control. And then as we move forward, we build a little bit of volume higher, but most of the volume we end up building up is right in the middle of the profile. It is consolidating again. We are yet again in a balanced kind of configuration. I expect that the move out of here is likely to be pretty strong because we're one time framing up and we are holding this impulsive low. This could be a longer time frame flag here that we're building over several days. It's a very odd shape here. We did have an impulse here on the 15-minute, and we have been doing this throughout. So the expectation is for a continuation move down to 38. That's what Hypo 3 was about yesterday. It just isn't ready to do that. The problem is that, again, as I said, we're one time framing up. We're building a channel that is slightly skewed upwards. And so that creates a bit of a conflict. We do have some fairly good resistance above. We got fairly close to the 65 yesterday. We missed it by about 7 ticks, and I'm looking for this to continue lower. That is the normal course of action of this auction, based on last Wednesday's action. Remember, last Wednesday dropped due to the FOMC minutes, and in my opinion, we have not finished. We have not completed that move. So this could just be the flagging consolidation, bigger time frame zipper, for the market to build the energy it needs to start moving lower. But with the one time framing up, it looks like the buyers are winning by just a slight margin on a daily basis. 44 and a quarter. 44 and a quarter moves to a little bit higher, around 46, then 47, then 47 and a half yesterday for the lows. So when we look at these lows here, it's just a slight advantage that the buyers have over the sellers. But overall, the market looks like it's ready to rotate lower and complete the move. And I would strongly expect a break of the 44 and a quarter impulse low, and that's the first target on any selling. And it's getting very, very close to where we are now. Let's look at the overnight. The overnight was fairly balanced. Pretty good volume on the overnight session. If you look, uh, there's um, uh, there's an indication there's 172,000 contracts, but it didn't really go anywhere. We have a nice profile. We're trading. We traded right off on the open. We attempted to pull back. We pushed right up against yesterday's mid and M low. So this 54.50 looks a lot like the 65 we left behind on Wednesday. Sellers came in on the close. We tested into that resistance, and then we did a nice little impulse move down and have been going in a corrective sideways kind of trade. It is holding right at the point of control, but below the mid of the session. And my expectation this morning is for it to continue lower and to take out the 47.50 as part of that overnight stat. Okay, so just while we're here, let me show you real quick what the daily's doing. This is the day session. Here's what I'm talking about. We have a pretty decent consolidation going on here. And if you look at the last 3 days, look at how compressed these days are. Yes, we do have a higher high here from yesterday, but overall we have dropped out. That was the Tuesday. We have had our continuation move. We are doing what looks like a correction, but overall it is really consolidating right here. These are the 3 days that make up my composite profile. You can see the volume is pretty good. The volume is just staying at or above the point of control. There's for days that aren't going anywhere, we're getting pretty good participation. The range is just above the point of control on a daily basis. So yesterday we got 15.75 points of range. That's pretty high for a Monday. Generally, we get somewhere around 10 and a half on a Monday, right inside of the mode here of all days going back to August 24th. 2015 is when this chart starts, and the volume is there. So what we see is a fair amount of compression, in my opinion. And then also, the other thing you want to notice is if you look at these deltas, the yellow line is everything that is 41 contracts or less, and the white line is everything that is 42 contracts or more, lifting or hitting the bid. And so lifting the offer, hitting the bid. And so what we have here is a lot of participation on the sell side by the smaller players, but The bigger players are still not participating in this move. There's an indication here that positions have been taken by the OTF, and they're just waiting it out to see which side starts to play out. If we start to move, this line is likely to move to start to drop very quickly, which would give us a pretty strong sustained move down to 38 initially. So there's a slight divergence here in our deltas, where the smaller participants continuously, you could see that here last Friday, smaller participants continue to participate in this area, whereas the bigger participants have a pretty flat line on their trades, and we're able to detect that by filtering them out. Let's get to our hypotheses. I'm out of time. So here we are in a 3-day consolidation. My primary expectation this morning is for an open auction. I expect this to go sideways. Look for an attempt at responsive. I'm looking for um, some resistance at 52, and then I'm looking for it to drop through the 47.5, and then likely to bounce back up and finish somewhere near or in the 3-day balance as a primary hypothesis. So any attempts higher this morning, I'm going to look for an indication to sell, and then I'm looking for 47.50 initially to mitigate risk, and then I will start working on the 44 quarter, and then the 40 ahead of the 40, and then 38 is a key target below. 38 is this high volume node that we've left behind here. So that's where I'm expecting this low to end, and then I expect it to come back and get back into balance. Remember, overall, we are in balance here. We've been in balance for days. If the market starts to have an open auction and it starts to move down and it does not get a good flush on it, I expect this volume right here to start flushing out. If it does not get a good flush on it, then I would say caution shorts and look for a failed attempt to push lower, and then look for it to come back and push to 53.25 and back into balance after testing the low. So yesterday tested high, today it might test the low and come back into balance to build more energy as it's not ready to start crushing one side or the other. Those are my expectations for today. Of course, there's a third, fourth, fifth hypotheses, including trend. But remember, the key thing to take away here is that we've been consolidating for 3 days now inside of a bigger consolidation. There's a lot of volume on the composite profile. That that volume, once it dissipates, is likely to make a pretty decent move, and it's not a move you'll want to fade or trade against once it starts moving out. So the ideal situation is that it makes an attempt at the high, at the responsive, again towards 52.50, 53. Offers come in, sellers start hitting the bid, and then it starts to roll over, and then that'll entice the bigger positions to start liquidating, and that's likely to give us a pretty good trend down to 23.38. Good luck today. Again, I want to remind you, next Wednesday, I'm doing an AMA with Futures IO at 4:30 Eastern. Look for the invitation in the description of this broadcast and on my Twitter feed, twitter.com/FuturesTrader71. Follow if you already aren't. I appreciate it. Take care.